PB Fintech, the parent company of Policy Bazaar, reported a sharp narrowing in losses in the fourth quarter. The company is now hopeful of turning profitable this fiscal and has claimed it will achieve 1,000 crores in net profits in the next 3 years. My colleague Sakshi Batra caught up with the company's founder and CEO, Yashish Dahiya, to find out how he aims to achieve this.
Good set of numbers for Q4, so congratulations on that. The company has turned break-even at the operating level for the quarter. Help our viewers understand your own sense as to when do you really expect to turn break-even at the net level now, and profitability once attained, how do you see it growing further?
I think next year we have guided that we should be profitable at the PAT level. We should obviously, to achieve that, we have to be significantly profitable at the adjusted EBITDA level. And what that also implies is, from a cash flow perspective, we are already positive. So both at an operating adjusted EBITDA level and a cash flow level, we have now been positive. Now, I think, Sakshi, what one needs to understand is the core business has now been profitable from again, a EBITDA perspective, operating level, for about 6-7 quarters now. So it's not a new thing for the core business. I think what has happened is the core business is now making enough EBITDA to cover the losses created by the new initiatives. The new initiatives, I think we started about 18 months ago. We have grown very rapidly in those. And yes, when you grow such a business, you have some investments. We have now reached a stage where we are comfortable with our losses on the new initiatives. I think from here onwards, at our operating level, we should not. We should continue to be positive. We've also given a second guidance, which is around 2027. We should have a PAT of about 1,000 crores, which should be encouraging from from investors' perspective, and it should also be encouraging from a company perspective, because that will really improve our cash flows quite a bit.
The buzzword right now is AI and the new technologies, ChatGPT. Have you been able to explore any of that so far, looking as to how this can really help scale up your business going forward from here?
Yes, so both the businesses continue to look at the cutting edge technologies. The sort of data analytics and the AI work that we do across both the businesses is actually very, very cutting edge, and we hope that we are able to demonstrate some of that to the market and to the investors very soon. Just to give you some very, very simple examples, we have these, huge number of calls which go out every day. We are able to convert those calls into text and then analytics over it to understand better about the customer requirements. We have created a live score, like you would have heard about credit score, but internally we have created a live score where we look at, is there a risk that this customer may be a fraud? And if that's the case, what do we do to deep dive into that particular case? And a lot of that stuff happens through facial recognition technology that we have in-house built. And then we share that data and that insight with our partners when the case goes to the partner. There are multiple such things that we do as a company. And, eventually if we are looking at growing faster than the market, and if we are looking at creating more efficiency for ourselves, this is something that has to be done by any company, not only just by us.